Hello everyone, this is Collar. In today's video, I'm going to do an analysis of the pound US dollar currency. The reason for the analysis of the pound today is because the UK is potentially announcing an interest rate hike. So this could impact the pound US dollar. So let's have a look at the charts and see what may happen following the news announcement. So I have my free screen set up. The top left-hand chart is the monthly time frame to get a large picture of price action. And then we have the weekly on the top right-hand side. And this long chart along the bottom here is the daily time frame. This is where we actually enter our positions. So a look at the monthly time frame for the pound US dollar. Just look at, if I just zoom it all the way out, price. If you look all the way here, so just zoom it all the way out. So we can ignore this period here during the 80s. Just gonna keep it like this. So this high that you can see on screen was from November 2007. That's when the pound US dollar exchange rate was over the 2 mark. So at that time, £1 was able to get you $2. And since then, it's been a slow but steady decline. There was a really fast move to the downside between August 2008 and January 2009. So if you look at this move here, this was a decline of 36%. Then price went into this consolidation phase. So this lasted all the way up until June 2016. If I just zoom in here, and if I just put my crosshair at this low, we can see how this zone area was used as resistance. Yes, price did move above this level, but price was unable to really trend consistently above this area here. And since then, prices found further weakness. And if you recall, last September, price reached record lows. So at this point here, you can see this long spike below the candle. This low reached a level of 1.0356. And since then, there's been a recovery. So price bounced sharply off this low and has now recovered 23%. And if you look at the move for this year, so if I go to January's candle, which is here, so price opened at 1.2083. So to current price action, the price has moved up 5.73% this year so far. So price is definitely on the rise, but has re-entered this area of consolidation. Let me just mark this with a rectangle-like tool, and we can see this area of consolidation. You can see how price spiked down below consolidation, appeared to form a bearish trend, but bounced off support and has now re-entered this consolidation. So what may happen next is price may just continue to move sideways, or we may see continued strength and an eventual breakout above the consolidation high. But we have to look at the lower time frame for areas of resistance that may stand in the way. So let's look at the weekly time frame. The weekly, we have the 50 simple moving average, the orange line, and the 200 simple moving average. So the 200 is the stronger of the pair and forms strong levels of support and resistance. So price is now approaching the 200 simple moving average. So we may see a rebound from this level and a move back to the downside. If we look at the 200 in the past, you can see around this area price bounced off the 200, but then it did eventually break through. But in the past, prices hit the 200 but failed to break through, such as this period in April 2018 and again this period around January 2020. So it's definitely a strong level of support and resistance. So we have to wait and see how this 200 simple moving average impacts price going forward. Now let's look at the daily. Also, before I move over to the daily, just above the 200 simple moving average, we have the 1.3 round number. So two levels of resistance right next to each other could form a strong barrier and prevent price from moving further to the upside. A look at the daily time frame now, and you can see that price broke above the 200 simple moving average back in December 2022, did come back down and use the 200 as support around January this year, start of this year, and then moved up again, came up to this point at 1.2427, and then failed and came back down to the 200 simple moving average. We saw a bounce off the 200 simple moving average in March, and since then prices formed this pattern of higher highs and higher lows. So there is some momentum, not the strongest move to the upside. We want to see a nice clean linear move, a more steeper trend. This is moving sideways to up, so it could be setting up for an impulsive move to the upside, but right now the momentum isn't that strong, especially as price is approaching a strong level of resistance just above. So if the Bank of England does introduce a bank rate hike today, then it could impact price. Where price will go is unclear, but what is clear based on the charts is that we have a strong level of resistance just above, and as price is approaching that level, we may well see a rebound from this resistance and a decline, or we may see price break up through this level. So do keep an eye on the pound US dollar, because if it does force price up through this level of resistance, then there may be some long opportunities in this currency pair. So we will keep you updated, so do ensure that you are subscribed to the channel and you hit the notification icon so that you get all of our videos as soon as they are released.